Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Monday, August 28th, 2023. Before I click through the charts as usual, just want to encourage you to please click like if you haven't already, become a Wicked Stocks YouTube channel subscriber, and share the content if you would with friends and colleagues. And please check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Apple Report. Daily analysis in the SPY and the Triple Q, weekly analysis in the weekly analysis in the S&P 500, the NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for 20% moves on those underlying stock picks, and we offer a 5-day free trial up front. So if you want to check us out, you can do so for no cost. You can check out everything that I just mentioned. Sign up for wickedstocks.com. You've got 5 days to analyze all the videos that we produce on a daily and weekly basis every single day that we put them out. And if you don't like what you see, you can bow out at no cost to you whatsoever. So on with the charts. Take a look at the big picture. Work our way into the day as usual. Oh boy, about 3 months ago, I'm kind of guessing here, I'm looking at the chart. I know it was several months ago. We settled above the 168.50 long-term channel top that indicated a longer-term bullish continuation. This despite the near-term downside pullback that's been pretty ferocious the last 3 or 4 weeks. But I do see 168.50 as being able to contain selling through the rest of the year, and above which, ultimately anticipating 225.72 as our long-term objective. And when I say ultimately, I'm saying that is the sort of what I'm expecting. The timing of this, at one point, it was by the end of this year when we were pushing to those highs about a month and a half ago. But now Q1, Q2, Q3, anybody's guess, we need to see buy signals on the way up that would set that in play. And I'll be showing you that here actually in this video. So, as we were approaching 168.50, and it became actually, I guess the best way to say that, it became a target when we settled below this 183.66 long-term channel bottom that is projected off the January low. Now, this is a daily chart, and we settled below this over 2 weeks ago, probably closer to 3 weeks ago. We settled below this formation that set up the upper 160s as a 2 to 3 week objective. So we are a full 2 to 3 weeks into that sell signal and is not fully played out. I can't even say that we've come close to testing 168.50, but it is there to test. And certainly, as long as we are below 183.66, it remains in reach. By some point, possibly this week, by some point in September, tough to call. On the way down, I still have 174.09, this former channel top that we settled above last week. Was that Wednesday, Thursday, Friday? No, that was more like Tuesday of last week. And we've got a 1-day pop out of it, almost retested the 183.66 channel bottom, and then obviously we backed off Thursday of last week. A bit of a recovery on Friday, and we're kind of in this range now. But if we do, let me actually go to another chart and show you kind of the day itself, and that is all the minor points are obviously carefully chosen, but in terms of our pivot points for the day, it is 176.38 downside. That is the low settlement price from last Thursday following that pullback high, and 181.12, which is the high settlement that was put out Wednesday of last week. And so we could trade inside this area all day long. I could have labeled these or considered these to be session containment levels. They are well suited for day traders, aggressive day traders, and all the minor points in between have merit. For aggressive day traders. That is to say, some of you like to scalp a half a point or several points throughout the day, more than once a day. But if there is the trade of the day right now, it is the 176.38 to 181.12 region. Selling 181.12, buying 176.38. Now, these levels may well be violated today. Volatility is still higher than it was a couple of weeks ago. And if we break 176.38, 174.09 is likely today. So there's that is one day trade if you can play the short side below 176.38, anticipating 174.09, covering a short position at 174.09 or going long at 174.09. This formation still able to contain session weakness. Now, if we do close below 174.09, that's still I don't want to use the word targeted because we've kind of neutralized a bit with the settlement above this channel top. What I will say is holding below 183.66 will keep 168.50 in reach, in easy reach, I should say, over the next several weeks. But to call it an objective, we came close to testing it about a week and a half ago and came off of that area nicely. This is a counter trend sell-off. I do see the longer term outlook as still bullish. There's still an updraft as far as I'm concerned above 168.50. So it's no surprise to me that the market failed to fall into that 168.50 area about a week and a half ago, and we've recovered nicely, but we still have, and this is sort of the week ahead. 174.09 is decent day support. 183.66 is decent weekly resistance. So if we're testing 183.66, and I can go back to this chart here, if we test 183.66, it is an opportunity if you're long to cover any long position, and also set a short. So if you're long for whatever reason, maybe you're long above 181.12 today, or maybe you're already long. But the point with 183.66, it is a level that can contain weekly buying pressures and quite possibly into later September. So it is an opportunity to set a short position. That could mean selling Apple outright and being short the stock, or reaching for 168, 169 out of the money puts that don't expire. I would go a month out. This could take several weeks once we test 183.66. Inversely, if we test 168.50, because of its longer term scope and its ability to contain selling through the rest of the year, if we test 168.50, you might reach for 185 out of the money calls that don't expire for at least a month. You might go a couple of months out on that because 183.66 is climbing away, and it is still 183.66, part of a range of resistance. Where are you here? That is narrowing, will later this week narrow entirely. 187.07 is a descending 2/3 speed line that is based in part on that pullback low that was put out a week and a half ago. So, as I've been saying, as we move into September trade, we remain susceptible to testing 168.50 at some point in September over the next several weeks. And inversely, if we were to close above 187.07, we've got a good low through September, and we should then continue higher all the way into the lower 200 area, I think. So if over the next week or two we settle above this 187.07 descending 2/3 speed line, that is an opportunity to go long. So this 205 area, I'm just going to round at 205, but just know that it's climbing. It'll be 210 over the next couple of weeks, so forth and so on. And I do want to mention that first off, if we were to test 168.50, you may reach for 210 out of the money calls that don't expire for at least several months. I think that that's more of a 2 to 3 month move if we were to test 168.50 sooner than later. So I'd say you might even go 6 months out on that 210 out of the money call. And I'll also say, as I said just a moment ago, that if we were to close above 187.07 over the next week or two, you could reach for, the 210 out of the money calls. And where are you? Here we are, that don't expire under that scenario for at least a couple of months. I would say this is a realistic 3 to 5 week move. But once again, 206.79 is climbing gradually, and that would be the play that I think could be made. As we push into this narrowing zone of resistance between 183.66 and 187.07, once again, you may reach for 169 out of the money puts that don't expire for at least a month. You may go a couple of months out on that. So these are just rough numbers. I know sometimes I even probably, and I don't listen to myself closely, I might use different numbers in the same video. Instead of, a month out, I might have said several weeks out. But I think you understand that if I've got a 2 to 3 week target, once we test, say, the low to mid 180s, that I like to go twice the distance out in time with respect to the option itself, because you never know if it's going to take 2 or 3 weeks. It might take 3 to 5 weeks, and you're sitting there long a 169 out of the money put that expires in a month, and the premium just erodes in accelerated fashion as you approach its expiration date, and that can be very frustrating. So you're better off spending a little bit more on those out of the money calls, and sort of removing yourself a little bit more from the time decay element. And the delta, the rate of change of that option, is more responsive to the underlying stock move anyway with those further out options. The problem, of course, not the problem, but the negative, the downside is that they're more expensive. So I'm going to go back to today itself, and I think I'll finish it. I just hit the 10-minute mark. I don't like to go past 10 minutes on any of these videos because, your attention and your time is precious. So 176.38, 181.12, two-sided framework today inside of this area. If we break either point, if we push through 181.12, we just might reach 183.66 intraday, and if we break 176.38, we should reach 174.09 intraday, where we can place a daily low, and if we close below 174.09, expect that 2 to 3 week objective that was set 2 to 3 weeks ago at 168.50 within the week, where we can bottom out through the rest of the year. I'm going to leave it at that. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Tuesday's Apple report. You have a great day.